Hey, this is Justin with DayTradeTheMarkets.com on Thursday, December 27th. Hope everyone had a nice Christmas. Getting ready for the new year as well. And normally, if you've been trading for a while, you know that this week between Christmas and New Year's is essentially a holiday week. The market rarely does much of anything. However, there's a different story this year with all this fiscal cliff mess. And so if you are trading this week, you definitely want to be careful because the market can be quiet and then some political news can come out and the market will go a little wild. So what I wanted to talk about and show you is how you can use kind of what we call our first basic building block, the relative aggression bar, and especially the level 3 and level 2 aggression bars to help you make better sense of what's going on in the market, help you stay on the right side of things, stay out of trouble, and also capture some of the opportunity that actually happens to exist this last week of the year. So what I thought I would do is just kind of strip the chart down and look at just the level 2 and level 3 bars and show you how to make some sense of that. But before I do, let me add a little bit of context. Let me go ahead and bring this image over here right there. Essentially what our software does and how it can help you is that it's giving you various pieces of real-time market-based evidence, and that the more of these pieces that come together, the more that it can help you support a trading decision you might be looking at, or you could wait for what we call a confluence situation for 2 or 3 or 4 of these to line up nicely. The more pieces of evidence you have, the better your edge. And that's the whole goal. You're trying to increase your probability, your edge. And the way that we look at trading is that you are, as a trader, you're a professional decision maker. And you can make better decisions if you have a better understanding and better evidence, better information. So better information equals better decisions equal better results. Okay, so we've got these various pieces of real-time market information, and the one I'm not going to focus on the filter right now, or the divergence bars, deceleration bars. Not going to focus on support resistance zones that form in real time. Not going to focus on these high velocity moves. What I want to focus on instead in this is what we call our first building block, the relative aggression bar. Okay, and to give a little bit of context with that, let me just bring this this picture over as well. Essentially, the way that we use these, or what relative aggression is telling you, or relative aggression bars are telling you, is that is when one side, buyers or sellers, is more aggressive than the other. And that's really the only reason the market moves, is if one side steps in and becomes more aggressive than the other. Okay, and the way that we get these relative aggression bars is we analyze order flow. We try to, essentially order flow is going to lead price activity. So we're trying to look under the surface of what's really going on in the market, rather than just depending on purely on price action. We want to kind of predict that, see what's happening before price actually moves. And the way that this works is that relative aggression bars are telling you, they're analyzing the real-time order flow to tell you in real time, number one, which side, buyers or sellers, is more dominant at a given moment, and then number two, to what degree is that domination. In other words, is there moderate buying aggression, strong buying aggression, extreme buying aggression, that sort of thing. And with that, these relative aggression bars can act as basically a real-time roadmap to help you understand the likely short-term direction of the market. And I'm going to show you how that looked today as well. Now, essentially, we have 3 levels of these aggression bars. We have our level 1 buying and level 1 selling aggression. We have our level 2 buying, level 2 selling aggression. We have our level 3 buying and level 3 selling aggression. And these are moderate buying and selling aggression for level 1. And, you certainly want to take it into account, but it's not great information. You just want to kind of, it's good, especially if you're managing a trade, to understand when that's happening. And that's going to happen, give or take, depending on the market and the time frame. But just as a general rule, that's going to happen 15-20% of the time. You're going to get a level 1 bar. Level 2 bars, where we want to start paying more attention. This is when we're having some strong buying or some strong selling coming into the market. And these bars are going to happen approximately, and this is a rough figure, but approximately 2 to 4% of the time. And then these level 3 or extreme buying and selling aggression, that's when we really want to be paying attention. That's giving us some really high quality information. And again, that's only going to happen 1 to 3% of the time. Okay, so it's very important when one of these happens that we monitor what that is. And so with that as a little bit of a background, let me throw on today's chart and again take off everything except for these level 2 and level 3 relative aggression bars. Okay, so I'm not going to show any of this stuff. Okay, so here is a 1-minute chart of the E-mini S&P, and again, you could use this on any time frame. The same logic would apply on the ES, the E-mini. I tend to like to look at the 1 or 2 minute chart for good short-term trading. And so you can see that as we opened up, what we like to do is especially look for the first major structure of the day, and that was this level 3 selling aggression bar. It happened to occur on the low of the day at the time, and we want to ask ourselves, when that happens, do we get rejection? In other words, does the high get taken out? Do we have trade above the high of this bar? Or is there follow through? In other words, does the low get taken out, and is there trade below the low of that bar? And you can see this first bar of the day, within a minute or two, the low was taken out, and then we had another level 3 bar that came in as well. So at this point, the first structure of the day is telling us that sellers are very strongly in control of this market, and you certainly don't want to be on the long side, and that you would want to be looking for possible opportunities to get on the short side. I'm not going to get into trade entry at this point. I'm just trying to help you see how these level 2 and level 3 selling and buying aggression bars can help you stay on the right side of the market. Then you can see we get a couple of level 2 selling aggression bars, and then a level 3 buying aggression bar comes into the market. Now, just because this level 3 bar comes in doesn't necessarily mean buyers have taken over. I'm going to show you a little bit of a difference later in the day, but it is telling us at a minimum that this pure wave of selling has at least come to an end. It's not pure seller domination. It's a little bit of a back and forth or a two-way buying and selling activity in the market right now. You can see the market does consolidate in there. We have another attempt to move above this level 3 buying aggression bar with this level 2 bar. That's pretty quickly rejected. And then we make new lows on the day with this level 2 selling aggression bar. So again, we want to ask ourselves, do we get a full bar above here? We do. But so at this point, we would say that the sellers are basically in control of the market. There's not been any strong buying with immediate follow-through that's come in, although it's a little bit choppy once this bar did come in. Okay, so then we make a new low with a level 2 bar. Then we have a level 2 buying bar that comes in that again is telling us it doesn't mean that buyers have taken over the market, but it means the selling dominance, this pure wave of selling that was started here, is at least over, and we want to be on guard. And you can use other tools at this time, but I'm just trying to show this level 2 and level 3 bar. Here's another level 2 bar, and then we get the news at this point. And when this happened, you wouldn't have known the news was coming out. But essentially, what's happening is that I guess Congress has decided to reconvene on Sunday to try to make sense of this fiscal cliff stuff. And so that's obviously the market wants that to happen. That's good news. And so you can see that we get this level 3 buying aggression bar. But I want to compare that to this level 3 buying aggression bar here. You can see this one, we had a level 3 buying aggression bar. The high wasn't taken out for a good 10-15 minutes. We just traded within the range of this bar for a while. Now compare that to this bar. The high was taken out the very next minute, and it actually happened again with another level 3 buying aggression bar. Obviously, that's a very bullish indication, and you can see these bars actually overlap, and we tested that. It's kind of what we call the sweet spot. It doesn't happen too often, but when you have 2 of these level 3 bars right in a row, it's telling you that something extreme is going on in the market. And if this kind of the sweet spots where those 2 overlap, and it's hard to see on this chart, but a minute or two later, that's exactly where the market tested to right here. So kind of a nice opportunity there. But you can see again, level 3 buying aggression bar followed right away by another level 3 buying aggression bar. Its high was taken out relatively quickly, and you can see that the buying has just come into this market pretty dominantly. And it's not until this bar here, this level 2 selling aggression bar, that came in. And again, this doesn't mean that sellers have taken over the market. It's just telling us that this pure wave of buying has at least come to an end, and now it's a little bit more two-sided activity. Okay, so again, not going to get into the support resistance zones, the filter, decelerations, and all the other pieces of evidence that you can use to make even more clarity of what's going on. I just wanted to kind of talk about that first building block, which I think is especially important on a week like this, where it's typically quiet, but there is some news that you want to be aware of. So whether that's to keep you out of trouble or to help you get into some better opportunity, either way, by using this basic tool, you can certainly increase your edge, and that's really what it's all about. So hopefully that makes sense. If there's anything interesting that happens tomorrow, I'll do another video. Otherwise, hopefully everyone have a great new year. We're looking forward to hopefully everyone's looking forward to a great 2013, and we'll talk to you soon. Thanks.